Will the European Union collapse after Corona? In this video, we show you exactly, based on documentary evidence, that the crisis, that the situation with the economy is very bad. And this situation is more severe than expected. And after, we will show you what you can do to protect your assets. What are the measures, what are the strategies, what you can do to better protect your assets from the crisis, from the collapse of the euro, from the collapse of Europe, and from the crisis of Europe. Stay tuned.
Caputo and Partners, SwissBankingLawyers.com. We fight for your money.
Hi, Silvan. It's a great pleasure to have you here today and to see the documentary evidence on the crisis. Apparently, the crisis will be very, very bad than people expect. We will have a tremendous crisis. The industry, the economy will suffer tremendously. So what can you show to us today to prove that we will have a future, a very hard future?
Yes, hello Enzo, thank you for having me here and interviewing me. Well, as you know, the state-imposed lockdowns in Europe are I would say for the whole industry, for the whole economy, very severe. I think nobody says that that's an easy thing. And most of the country, they will just suffer and tremendously. I mean, they refer to home office, but it's actually for many companies that's not possible. I mean, think about the travel industry or the event organization companies and so on. I mean, there are thousands of companies that suffer GDP declines, net income or turnover declines from 10 to 20% or even more. So I mean, this is
record in history, correct? This is the most.
Yeah, it's certainly more than what we have seen in 2008 in the great financial crisis. So yeah, I would say that's quite something.
And nobody can say when this crisis will be terminated, the lockdown.
Yes, I mean, there are plans to reopen the economy now, the stores and the restaurant and the bars. But even then, I mean, they have social distancing, and if you imagine a store, then I don't know how many people can enter the store if you have to have 2 meter spaces between humans. I mean, that's not so easy. So, yes.
Okay, show us the charts, show us the evidence. We are very curious to see the evidence.
Yeah, well, what I have done is I have put together some charts that just show how the situation currently is. I mean, there are very many different charts you can look at, but I have here, for example, the IFO Business Climate Index. This is kind of a survey, so you ask or they ask 7,000 companies and their CFO and CEOs how they see the situation currently.
Very interesting. Very interesting.
And they usually then answer with they see it very good, very bad, or just neutral. And you see now here in the chart the results of those surveys. That's the last data point here is end of April 2020. And I mean, you see now here the steep decline.
Wow, tremendous decline at the end. Huh? Tremendous.
Yes, that dropped below 75 now, and you see here in a comparison in the great financial crisis, this was at 80. I also have to say about the IFO Business Climate Index, that's actually a survey done in Germany. Why did I take Germany? That's because of Germany is I would say nobody would say it's not an important country in Europe. I even would say it's probably the most important economy in Europe. So that's why I took this index.
That's good. That's excellent. Germany is a very strong country and indicative. Wow.
Yes.
Impressive. Very impressive chart. So this shows that it's worse than 2008.
Yeah, definitely. It's now in Germany. I mean, we will see how that is in GDP measures, but it certainly won't be good. I mean,
You have other European countries?
yes, I can show you, for example, a PMI index I have here. They measure the situation in the Eurozone. It's
What is
somewhat.
the PMI index? The PMI manufacturing index, Eurozone. What's that? Can you explain?
Yeah, it's a purchasing manager index that's usually more showed from the US economy, but it now also exists for the Eurozone, as you see here. And it's similar than the IFO survey. So they also go to companies, CFOs, CEOs, and asking them, well, how do you see the situation? And they also can answer how they see the future of the business, how they see it currently, and all those points points they give them that will go into the index.
Also here we have a brutal decline, tremendous decline.
Yes, the problem here is the first data we have is from 2017 on, but you also see that it declines quite strongly. And you know, here is always the level, it is 50. That means when you are above 50, you have an expanding economy, and if it is below 50, you have declining economy.
Very declining, very declining. Thank you.
I mean, it's very rare. I can't remember that I have ever seen values below 35. So
it's record, the record.
That's certainly somewhat alarming. Yeah.
Wow, very impressive chart. Unbelievable. And what do you expect regarding the United States of America? What kind of recession do you expect there? Because
well, in the USA, as we have said before, we could also look at the PMI index there. One have to remember that the US is in terms of the crisis 2 weeks to a month before Europe, and I think that's also what one can see here. So that decline was not that steep than in Europe, but I also expect this value to drop further. So I mean, here you have 2008. We haven't reached that level now yet.
Very pessimistic figures. Wow.
And one could also say, yeah, well, are there other figures in the US that are probably more alarming? And if you turn to the US initial jobless claims, those are people that were laid off in the US, and they go to the government saying, well, I was laid off and I need help, and
that's
they pay them for jobless insurance. So
unbelievable. We have here 30 million jobless people as per today.
It's a number taken every week. So that, for example, means as of the 20th of March, 3.3 million people went to this office, to the government, saying, well, I was laid off and I need insurance. And that's usually counted together
we have 30 million jobless people total.
Usually one looks at a certain time period, right? And I took here the 20th of March, and since then we have over 30 million people claiming jobless.
Unbelievable. That's crazy. That's unbelievable. 30 million jobless people. This is wow. This is.
I mean, if you look at how many people are living in the US, it's about 330 million. When one says, I don't know how many of those really work, but I would say between 110 and 130 million, let's say 120. So this, then, you know, the 30 million of the working force is quite a lot. Sure.
Yeah. Wow. Wow, very impressive.
See here the history, we have never seen such a...
Never seen, even 2008 is nothing compared. If you see 2008, it's a small peak there, but nothing.
That's crazy. Yeah.
That's nothing compared with what we have now in 2020. Wow.
Yeah, correct.
Very impressive, very impressive. Wow, these are not good news. These are not good news. Wow.
Yeah, well, you know, in the US they also don't have other possibilities to lay off. I mean, they don't have, as we say here in Europe, you know, short work, or I don't know the correct English name, but we have here from the government, they don't want that people are laid off, so they give them the possibility to that people work they don't work, but the companies get 70 to 80%, depends on the country. They get from the government. So
what is scenario? What is the scenario for Europe? What do you think will the European governments do, or the US government do, to face these problems, these tremendous problems, this crisis, this recession? What will happen? We will have inflation. What will happen? We will have how they fix these problems. What will happen? Will the euro survive? Will Europe collapse? The European Union will collapse, or the Eurozone will collapse, or what? It's difficult to make forecasts. I know it's a very difficult question, but what do you think?
Yeah, it's a difficult question. I mean, the inflation question is anyway very hard, because what could be seen is that now most of countries, they put together some aid programs, right? They're putting billions into the economy, and people say, well, that will create inflation, but I'm not so sure about that. Usually inflation is mostly driven by wage increases, salary increases, and in this scenario it's very unlikely that we see higher salaries and higher wages. So I don't see big inflation coming up. I rather would say we see deflation or somewhat flattish numbers there. But what I have also done for the European economies, I just looked at how many days actually the economy was closed. So people.
Wow, very many days the economy was closed.
Yeah, I mean, it's hard to say for every country. Like the US, there it's very different from state to state. But we could, for example, say from Germany that they closed down the economy at the 20th of March until the 6th of May. So that's actually 33 working days. And I mean, in the 6th of May, it's not the case that everything is open and normal again, right? So I would say that's pretty still a pretty realistic number. So the 33 days, they are, I would say, quite a lot, considering that we have 250 working days in a year.
Yeah, that's more than 10%. That's more than
10%, right?
30%, exactly.
Yes, and now one could discuss, well, how much output had the economy during those 33 days, and I would say it's probably around 40%, right?
Yeah.
And this would equal, if you take the 30.2 and the 40% output an economy has, it's actually lost then from 60% from normal output. So that would mean around 8% for Germany GDP decline.
GDP decline 10%, around close to 10% for Germany.
Yeah, you see them here that for the UK it's even higher. And of course, for Italy, they closed down 9th of March and opened. Gradually open now the markets again from the 18th on, so that's 50 working days, so that's 20%, and a loss of, I would say, 60% for the economic output. So we end up around 12% decline. So
12% lost GDP.
Yeah, for countries I didn't have quite or exact numbers, so for those I just took the 8% because it's kind of an average.
Yeah,
I'd say it's probably
more,
or it could be that's rather the defensive 8%. So I would.
What about Switzerland? Can you say something about Switzerland? We have also Switzerland here listed.
Yeah, sure. I mean the SECO, as we call our Bureau of Economic Statistics and so on. They are predicting a decline of 6.3%, if I have it correctly in mind. And in my view, that's still not realistic to reach. I mean, we had now 40 days of total lockdown. I would also say that the economy had an output of 40%. So I would end up in around 9.5% GDP decline.
Oh, okay. Excellent.
So now
but now
the question, what does that mean, right?
What does that mean? What will the government react? What the governments will do now to solve this situation? What will be the reactions of the governments in Europe and in the States, in the world? What do you think they will do?
Yeah, I mean, I took then most of those numbers directly in the estimated growth rate for 2020. I expect here for USA, for example, a little bit less decline because they are very tech-driven these days, meaning that Google, Alphabet, Apple, and so on, they make in the meantime a big percentage of their GDP.
Yeah.
So I would say for US, it's probably 7%, somewhere there.
Okay.
The rest I took more or less from the graph you have here, with some adjustments.
Okay. Excellent.
Here it should be -8% for Russia, not +%. So that's a mistake. But Russia is anyway not important.
Yeah, the figures from Russia maybe are not so reliable. So
no. So it's rather about the US and Europe. And as you see now, we have here those estimates I took from here, more or less, and you have here the GDP 2019 figures. Yeah. So I estimate those are the losses we have. So that's just 7%, for example, for the US for the 21 billion, or 7.9% for Germany for 3.8 billion, and those are the lost GDP.
Okay, very impressive figures,
And
so I'm wondering what the governments will do, to help the population. So what they do, I think they will increase taxation. They have to develop the measures they did always. So I think they will increase taxation. They will do heavy measures, and I think they will even restrict the rights of the population, because in Germany, for example, they want to avoid, to eliminate the cash money. They want to increase taxes. They are discussing property taxes. Even what is also discussed are capital exportation restrictions, that you cannot transfer money outside of the country. So I'm expecting very drastic measures. What do you think? What kind of measures can we expect? So an investor, what measures can he expect? I know it's very difficult to say, to make forecasts, it's very difficult to make forecasts, but in the past we have seen capital export restrictions. That is overnight, it can be legal overnight that you can export capital. They can increase taxation. They can introduce property taxes on real estate, because it's really very easy to confiscate real estate. So the rich have to pay their contribution.
Yeah, well, that's certainly difficult to say, but in the end, it has to be somewhat in higher taxes. I mean, how would you finance those aid programs they have now for the economy? I will show you later on what that means in a debt to equity ratio in the next table I have prepared. I mean, that's tremendous what's going on here. So you have actually two numbers in an equation, like debt to GDP, right? It's the debt and it's the GDP. And the debt is going up currently, and the GDP is going down. And you can imagine that for the equation, that's not a very healthy thing. So in the end, they have to increase taxes and they have to save money again. So all those aid programs are temporarily certainly good, but they will not solve the problem.
They will not solve it. So what they have, alternatives, they have to take the money of the rich. That means higher taxes is not enough. The taxation will go in the direction of confiscation. This is my personal opinion. So if you analyze what happened in the past, the measures I mentioned before, this measure we have to expect. We cannot say what will be the precise measure, but these measures will be tremendous. So investors should diversify their assets. They should not put all eggs in one basket. So somebody who is living in Europe should not have all his assets in Europe, because if his assets are in Europe, they are under the influence of his own government. That's a risk. So he should diversify. That means he should put his assets in a different country. Somebody who is living in the Eurozone, this is my personal advice, should go with a part, at least a part of his assets out of the Eurozone. Out of the Eurozone. I tell you, it's better to go out of the Eurozone and take your assets out of the Eurozone before the Eurozone will take the assets out of you, because this will arrive for sure. And Switzerland is a very nice alternative. You should definitely consider Switzerland, because you know what happened the last weeks is I'm receiving calls every day from the phone. People from all over the world, especially from Europe, is calling me, and not only rich people. I receive telephone calls from nurses asking, look, I have 80,000 euro, what I can do to protect my assets. I don't trust the Italian government. Yesterday I received another call from a German lady. She had 150,000 euro. She worked the whole life, and she doesn't want to lose this money. She's asking me what I can do, and I have to tell her, look, you cannot work with Swiss banks because the amount, it's not 500,000, but I advised her to come to Switzerland to buy gold coins, to rent a safe deposit box out of the bank, and to invest the wealth, the 150,000 euro out of the euro, to buy physical gold with that. And now she's doing that. This is the advice for small accounts. What can we propose to people who have substantial assets, for people who have 500,000 and more? What would be a good asset protection investment? So a safe, crisis-resistant investment. What do you think is the best crisis-resistant investment somebody can do under in these circumstances, in these very dangerous circumstances? Besides bringing the money to Switzerland, how should he invest?
Yes, I mean, what you have said before about the European countries, I have here the last table, which is probably the most important one. Quickly go through that. So if I took those expected GDP numbers for 2020, or the last year, the last GDP. By the way, you also see here the GDP decline in 2008. One could compare this number, and you see now, for example, for Italy, where I expect 12% GDP decline. So that was during 2008, 3.6%, or 93 billion. So you see that that's nothing compared to now. And that's almost for all countries the case. I mean, for Switzerland, it's also minus 9.6, and it was 1.7 during the financial crisis. So yeah, that's quite.
But the Swiss government is not indebted, huh? It's not indebted.
Yes, that's why I took those numbers and put it here. So you see here the GDP 2019. You see the national debt 2019, and you see then the debt to GDP 2019. So that's actually simply this number divided by this number. Very
interesting. This is the debt to GDP. Excellent.
Exactly. So, and here is now the estimates GDP 2020 from the numbers I have put together here. So for Germany, 3.863 trillion minus the 306 billion. I come up then for Germany for 2020 with 3 trillion 557 billion of GDP. And what I also see is that they will raise the national debt, of course. I mean, they have
tremendously the national debt.
Yeah, I mean those aid programs, they have to be financed somehow, and that's usually done with. That means the national debt will be higher than. So I expect here from roughly 2.1, it will go up to 2.4.
Very interesting.
And so you see now the measure here from 53, it goes up to 67.
Yeah, what does that mean? What does that mean? What do you think this means?
Well, that's again the national debt estimated divided by the estimated GDP 2020 gives this number. And now you see for Germany, because they were very strict in their budget the last 5 years, it's not so severe for them. But
It's
if
not
you
so
know,
bad for
if you
Germany.
know, if you now go to UK, I mean, it was
UK is also okay. If you go to Italy, it's very bad. Italy is bad again.
yes, we can see
105.
Italy afterwards. If you go to now to UK quickly from 93 to 110, and if you go now to Italy from 132, it will be around 160 in 2020. And here at the last column, you have the comparison to the Euro crisis, which was 2012. Italy was at that time at 126. So I mean, you see the comparison, and that's hard for me to believe that we will not see a Euro crisis again. I mean, you see those numbers. I mean, it's
what that mean? Tell me your honest opinion.
Spain as well. I mean, Spain
collapse or no collapse?
Spain was at 86 and at 120 now. I mean, it's yeah.
What is the result? What is your opinion on that?
Yeah, well, the result is that we see worldwide very high debt-to-GDP numbers that will go from 70 to 83, and in the Eurozone, I mean, for me, it's not possible to finance. I mean,
it's impossible to finance. Well, yes. Well done. Yeah, exactly. It's impossible to finance. That means that the wealthy people have to pay the bill to the government, have to do their contribution, I think.
I think it's just a matter of time. They have to raise taxes. They probably even have to take some money from the rich, or I don't know. I mean, there are, you know how it usually works when government
they confiscate. They confiscate. They can confiscate the pension funds.
Not very nice to say, but it's likely, yes.
Yes, they can introduce capital exportation restrictions. So you wake up in the morning, you read the newspapers, and it's written you cannot transfer money anymore to Switzerland or to any other country because the money has to stay in the country. This happens. This happened in Italy in the 70s. History shows this is happening. In Spain, we have confiscations of pensions.
Right.
In Poland also we had already confiscations of pensions. These measures will come. We don't know exactly what kind of measures, but the measures will be terrible. So therefore, I advise to all investors to diversify their assets to diminish the risk. Don't put all of your eggs in one basket. You know, so
by the way, we can just see the same thing in Lebanon, right? Lebanon also has a situation like probably Italy has soon, and there you can't transfer money anymore anywhere in the world.
Transfer money out. I have also several cases from Lebanese people, from clients. They invested money in Lebanon. They cannot transfer money out. The bank will simply not do it.
Correct.
Then we tested other solution. We said, okay, don't transfer money out, but transfer your assets. They have invested in shares, and then at the beginning, the government admitted the transfer of shares, but after they discovered this trick, and they say no, even transferring shares out the country is not allowed. And now you can. It's definitely finished. So even the loopholes. There will be also certain loopholes at the beginning, but even the loopholes, they will be discovered with the time, and you have no chance. So you have to react now, not to wait. You have to react now because this measure will come for sure. And we have prepared, Silvan, which is an experienced asset manager, and together with me, we have prepared a sort of an asset protection investment strategy to invest in valuable things, to invest in things and not in promises, you know, to invest in tangible assets such as gold, such as real estate, or even high quality shares. Can you explain a little bit, Silvan, how much percentage, maybe 25% in physical gold, 25% in real estate, 50% in quality shares? Because we have seen now in the Corona crisis that we have the clear evidence that quality shares didn't lose on value, so they survived quite good compared to low quality shares.
Yeah, I think I will come back to the quality shares a little bit later, but I think the first thing we have to say, Enzo, is that we have put together a list of Swiss banks that are very stable, and you can see the Tier 1 ratio there. That's just one measurement how secure a bank is. And we can help people to open accounts with the safest bank in Switzerland. So I would say that's
the safest banks in the world, I would say.
Yes, Yeah, that's certainly correct. And I mean, that's the first step you have to do, right? You have to find a good, safe bank.
A solid bank, a good capitalized bank with T1 capital ratio more than 20%. You should consider banks who are not involved in derivatives, banks who are not involved in structural products, banks who are not involved in risky lending activities. This is very important. And banks who are concentrated on wealth management. The core business of these banks you select should be wealth management and not investment banking on structural products or whatever. Wealth management and risk-averse banks. We have many of such banks we are cooperating with. We can suggest you multiple banks, very safe banks, and we will help you to open a multi-currency account. You can diversify the currencies. You can go out of the euro, for example, and invest in the Swiss francs. You can then, from this bank account, you can also buy physical gold out of the banking system. If you want, you can buy real estate to rates. But here I give the word to Silvan. Silvan, maybe you are the most specialized person in how to invest in a crisis-resistant way. What can we advise? What is our advice?
As you have also described before, I would still have some quality stocks, equities. I mean, one could say, well, in a recession, you don't need stocks at all. But especially when we have discussion what will happen, inflation or deflation, usually companies are most flexible in adjusting for current environments. Not every company can do that. Right, it's usually the one with the strongest products and the one with the least debt, not the most, and that's why I think it's still a very good idea to buy and hold for a long term quality assets, quality shares, quality company with good brands. With
give us a few examples. Give us a few examples of high quality shares.
Well, in Switzerland, we have several. I mean, the most famous one is probably Nestle, but
Nestle, yeah.
You can also buy a Geberit. The Sika is a very good company in Switzerland. We have several here on an international.
Make some names, please. Make some names.
Well, in an international name, it's an Accenture, for example. That's a company that advises other companies how to do business, how to do marketing. A typical consulting firm. I mean, you have many firms out there that
Nestle,
stable.
Novartis, Roche.
For example, yes. You also have a Honeywell in the US. In Europe, by the way, we also have some very good names. You have, for example, a Luxottica that was taken over by Essilor a few years ago. Those are very stable companies. I mean, it's a bit an expensive stock currently, but you know those products are have a demand. So.
These are crisis-resistant investments because these quality shares they didn't lose. Now in this crisis, they are surviving the crisis because people need to eat. Even if there is a crisis, you have to eat. You have to do certain things. You know, so there are certain shares which certain things you have to do also if there is a crisis or not. You need to survive. The world will go ahead. The world will continue. Not because it's the crisis, everything will stop.
And then,
then what are your other suggestions? Real estate, gold.
Yes, we will still then focus a little bit on real estate Switzerland, as we always did and still do. There you have to be a little bit careful that you don't buy too much commercial properties, that you also have residential, because residential is much more defensive, right? Because commercial properties can also lose quite some value.
You have been very successful with real estate investment, with Swiss real estate.
Yes, that was a very good
I hear
last years, and it still will be good.
Yeah, it's still a good investment, Swiss real estate. Okay.
And then the last thing is probably how we protect our assets. Still, precious metal is a big part of our portfolio, so up to 20%. Gold, silver, yes, we buy metals, and that's, I would say, good for every crisis, right? So
good for every crisis. So you also expect that the gold price will be skyrocketing, will increase drastically.
Yes.
So we have all preconditions showing that the gold price will go up. So you should you should invest a substantial percentage of your assets in physical gold with direct access. Here in Switzerland, there are private walls you can have. There are different ways to invest in gold. We made video on that. You can see our video also with Silvan. We made a video specifically on gold. So there are different ways to invest in gold. So what we suggest to invest, let's say 25% in physical gold, 25% in real estate, selected real estate, and 50% in valuable assets. So with high value assets who will survive any type of crisis. And if you have these assets placed in Switzerland with a stable bank, the bank is also very important. We will introduce you to very stable banks. We will show you how to select banks. And obviously, we will introduce you to an asset manager who gets results like Silvan. He has many years of experience. He has shown that he can produce results. He has shown that. I have seen that. I never lost a client with Silvan. Never. I introduced many clients to him. I never lost one client. Even now in the crisis, he produced excellent results. Sometimes it's luck. Sometimes these are skills. Or sometimes there is a combination of both. But the result is important. The end result is important.
And what is also an important thing from a European investor perspective is that we also hold quite some amounts in Swiss franc, right? So yeah. If the European Union collapses or some country like Italy will leave and have their own currency.
So if the euro will disappear, you want to say if the euro will disappear?
Oh, yeah, disappear or being there in another form, right? So yeah. I expect the euro to decline further against the Swiss franc, and since we have Swiss francs in our portfolio, that's kind of a natural hedge for European investors. So that's certainly also a good thing.
It's a very good thing. You know, you remember when the euro was introduced, the euro costed at that time €1, 1 Swiss francs and 73 cents. Now the euro costs 1 Swiss francs and 6 cents or 5 cents, €1.05 or €1.05. So from from 1 Swiss franc 73 cents to 1 Swiss francs 0.5 cents, it's quite a difference. So you see, just by putting your money here in Switzerland and investing in Swiss francs, only by this, you already have hedged your assets. Only by doing this, by not leaving the money outside.
Yes, correct. Yes.
No. I have many Italians, immigrants, you know, friends of my father and my family. They said, before they said, I bring my money to Italy, they give more interest. Why you want to give the money in Switzerland? They are giving interest here in Switzerland. Now what happened? You have more interest, but what happened? The substance lost, the value lost. So as Silvan said, the Swiss francs is a very important hedge. It's a very important hedge currency. By the way, in Switzerland, you have multi-currency accounts. That means you can invest in whichever currency you like. You have this flexibility.
Yes, I think that those were the important points to make currently. Probably in a week we are smarter and have other points to discuss, but currently that's the most important things.
So you have seen today that you have a very bad situation for the economy, very bad situation. So you can count, you can be sure the governments will introduce tremendous measures. They will increase taxation, they will introduce confiscatory measures, they will confiscate a part of your assets. So if you want to diversify your risk, you should go out of the Eurozone. Bring your assets out of the Eurozone before the Eurozone will take the assets out of you. Diversify. Do it now. Do it now. It can be too late tomorrow. You know, today it's illegal to transfer capital out of Germany, out of France, out of the Eurozone. It's legal. But you can wake up tomorrow and read in the newspapers that capital export has become illegal. And then what you do, it happens before, you know. We don't know the measures who will come, but we have to calculate that very, very heavy measures will be introduced by the government. Then you will be happy if you have at least a part of your asset in a safe country like Switzerland, in a safe bank, in the safest banks of the world. If you have your money there, you will sleep well during the night. You can sleep well and be happy that you have really protected your asset. So if you want to work with us, what you have to do is to take your mobile phone now, dial the number 004144212440, give me a call, and I will make a meeting with you and discuss your specific situation. I will collect your passport copy. I will collect a short CV from you. I will discuss the source of funds with you, and then I will come back after a couple of days. I will come back with some proposal of banks we can work with. You can make your own due diligence of this bank we have proposed to you, and we will help you to negotiate banking fees, honest banking fees with honest bankers, with honest asset managers. We will help you to negotiate fair fees, because such an asset manager like Silvan, they have institutional pricing with the banks. Why? Because they have substantial assets placed with the banks, so they have a much better price. Don't go alone to the bank. Come to us, go with us. You will save at least 50% because of that institutional pricing. So if you want to open an account, just make a phone call, make us a call, and we will help you. Remember, it's never too early, but often too late. Be rich and stay rich. I wish you a wonderful day.